Okay, so this is a quick video on how to manage the TurboTrading swing trades. Um, all of the swing trades that we have, we send them out in 4 different methods. First thing I do is I put them on the swing trade alert and in the trading room as either a new alert or an update. Then I take that information and I copy it and I paste it and I send it out by SMS. So if you're in the TurboTrading room or in the swing trade alerts and you're not signed up for SMS, I highly suggest that you do that because it's a very effective way. I mean, getting the flock message is very good as well. That's the very first thing. But SMS as well comes into your phone, allows you to act on it. From there, I try to post it into this database early, or as soon as I do it, or beforehand. Sometimes I forget, or it takes too much time, and I get late putting them in there. But then I do send out an email to everybody, members and non-members, just with a symbol that says that we've put an alert out on this stock. But you can always find the information here in the swing trade alerts members only page. And it shows our entry, shows our stop loss targets, and it gives you a bit of an idea of where we want to trade it. Then if we have executed some of the stocks, you can see here PLTR stopped out at 34.65, 35 cent profit. AMRS sell a quarter position at 17.595 profit, or 53.8% profit. Here's a loss on the fold. So the information is there, but let's just talk now about swing trades in general. It's not an exact science. When I put out the alert, I try to put a range in there. So we just put some out. A lot. We've been looking at the swing trades on the semiconductor stocks. So we just put this one out, Marvel. Now, when I send out the alert, I put a range in. For in this case, Marvel, maybe it was between 53 and 53.50. I put in whatever price I get it at. I put that into the database, and so your performance may not be exactly as what I've bought it at. But if it has gone up a bit, because sometimes they do surge, or the market is surging as I put out the alert, and it's still in the range, but at the upper part of the range, you can always just take half a position or a quarter position at that level. And then if it pulls back, add to the position, because quite often when I put them, they're breaking out and then they do pull back, and you can always add into it, or you can get into it. You just wait. And if you don't get it, you miss the stock. But the best thing to do is not to chase them. Don't chase them outside the range. Otherwise, it's not going to work. There's too much risk involved in it. So let's talk about the risk and the management of the risk. The stocks that we're taking most often are volatile stocks. We're looking for stocks that have the potential for big moves, and we get them. I mean, huge moves. Look at the till rate, $9.30 to $67. We put on MVIS at 10, and 2 days or 4 days later, it's trading at 22. So there's a lot of risk involved, and I set the stops quite a bit lower than our entry. And if we get stopped out, it's a pretty good whack. But if you set them too tight, you'll never be able to stay in the trade, because these stocks are quite volatile. So those are a couple of key points. So if it's running, don't buy it above the entrance, the suggested entry prices. If you do, just take a little bit and add if it pulls back. Now, just 1 second here. So let's talk about that for a second. So I mean, the marble is a nice, it popped out of there nicely. We put the swing on at 53.18. 50 is the stop. So you can see that down here at 50, if it gets stopped out at 50, it's at the channel, below the channel line. It's right at the support levels. So what I suggest, the best thing to do is you set your, now because I'm not going to alert everything. You have to manage these yourself. It's not incumbent upon me to manage these. I'm putting out suggestions of where you can trade them out with price targets and suggestions where you might want to stop it if it hits that lower end. What I suggest you do is you put a stop loss, or sorry, an alert, 50 cents below the price target and 50 cents above the stop. And if you're concerned about it, or you're not sure where you want to trade it or how you want to trade it, or you want to know what I think about it, then just post me and ask me and I'll tell you what I think. And it's more important really for the stop losses, because I put the stop at the support level. And quite often what happens with stocks is they go down through the support and then pull back, and then they go back up above it and they hold that level. So it's not an exact science. Now I want to go back one step before I get into how to manage the trade itself. I normally take every one of these trades. There's 100 grand in the account. I take 5% of my capital per trade. So if it's a $50 stock, I buy 100 shares. If it's a $5 stock, I buy 1,000 shares. So I take it on as a percentage of the portfolio, 5% of the portfolio. So that'll give me 20 trades, but I get 2-to-1 leverage, so I can put on 40 trades at any one time, and be fully invested. And so I'm aggressive right now, and I've got 30 or so in my portfolio right now, and so I'm fully invested. I'm fully committed to this, but I know it works. And so the point is that even if you have a smaller account, you'll be surprised how quickly this grows, even if you're only buying 10 shares, 20 shares, whatever the case may be. This strategy that we have, it works. My picks are, for the last 3 years, have been 70%. Year in, year out. And not that 3 years is that long of a track record, but you think about it, we've been through a couple of bear markets, some huge sell-offs, and every trade is posted on the website. You can see every swing we did. You can see it there. It's 72% success rate on these trades. 30% are losses. But our average, gain is around 23%. Our average loss is, around 10% or something like that, maybe 8%. So if you're right 70% of the time and making 20% on your money, and 30% of the time you're wrong, but you're only losing 10% of your money on those, then you can see how the account's going to grow, and it has grown. I just started a relationship with a company called Trade Exchange, and all the trades are verified. They have a patented platform. The trade actually goes through a broker, and I started in the week before the election with 100 grand, and last week it was at 200 grand. So, and it was up, so I doubled the money since the election, and the win rate is 72%. It's right on my average, 72%. So what that means, though, is that you have to, for this strategy to work, you can't pick and choose which stock you want to trade. You have to take every one of them. But just take 5% or 2 or 3% of your capital, put it in each trade, and run with it. And you'll be surprised how fast it'll grow. just taking small trades, like even if it's only 10 shares, 15 shares. I mean, you take a stock like Tilray at 9, if you bought 100 shares, that's $900, and it goes to 70, that's 7,000. Now we piece it out all the way up, so you may not have, you wouldn't have been a $9 to $70 trade, but we did average 268% on that. So on $1,000, you'd be on a $1,000 trade, you'd now have 2,680 in your account. So there is big potential to grow. So let's talk about some other issues here. So what I said was, so 70% of them are going to be right, 30% are going to be wrong, but that's over 3 years, so there's a track record. And the ones that we get, we try to let them run as long as we can. Sometimes we get stopped out and they keep going. Sometimes, they sell off sharp. I'm not right all the time. Like, for instance, Ballard Power, I put on a swing, and next day or that night or the next day they announce a financing and the stock drops, $3 or $4. It happens. I mean, that's just the way it is. I mean, one of the ones we did, AXSM, we bought it at 30, and 2 days later it opened at $100. They had a trade it opened at 94 or something like that, because they had the drug news came out. So I buy these. I put these stocks strictly on technical analysis. I have no idea what the fundamentals are. You can always, when I put out an alert, you can look it up yourself and decide, if you think I'm crazy. But my theory is that every point on the chart, every time there's a buyer or a sell, it's the sum total of all the knowledge of all the players, participants in the market looking at that stock at that instant. It's the sum total of all that knowledge. Some are bearish, some are bullish, but it puts a point on the chart. And all those points on the chart add up to something. And my ability is to look at those patterns and 70% of the time be correct in which direction the market's going to go on them, and therefore profit by it. That's my niche, and that's why we're so successful with this. But you still have to manage it yourself. You can't rely on me. I can't pull the trigger for you. I can't hold your hand on every trade. I'm happy to answer your questions if the stock gets around the support or the resistance level. You can ask me the question, and I'm happy to give you my opinion on it. But at the end of the day, it's your money. You have to manage it. I can show you what to do, how to do it, but you have to manage your own risk tolerance. The key to it, though, is that you need to take every trade. You can't pick and choose, because if you only pick the losers, the 30% that are losing, or maybe you pick half the losers and half the winners, you're not going to make any money. So it's a key issue. Now, the other thing is that money is a very emotional topic, and especially if you're a newer trader and new to this arena, you need to take all the emotion out of the trade, out of trading. It's just a business. 70% are going to be right, 30% aren't. Deal with it. It is what it is. If a stock goes down, just sell it. Get rid of it. Now, if you're unfortunate enough to just have started with TurboTrading, and and we're in a cycle where I put some on, and then all of a sudden the cycle changes, and the first 2 or 3 that you put on are losers, absolutely devastating, no doubt. I agree, but it's a longer term project. You'll see that if you had bought 100 shares of every trade that we did last year, you would have made $116,000 by owning 100 shares of each of the trades. And that's net, $116,000 net. So we know it works. We know that it's a good program. And you just have to stick with it. Stick and stay makes it pay. And so the key is take every trade, take, no more than 5% of your capital per trade, and, don't pick and choose. Don't chase them. If they go up above the entry level, wait till it pulls back. Or if it is near the top of the entry level, take a piece, take a half, a quarter. If it pulls back, add to the position. And it should work out fine for everybody. This is what I do. I've done it for the past 3 years with a trading room, and every year in, every year out, it's exactly the same, 70-30, and buy 100 shares of each, you make 100 grand. But as they always say on the mutual fund, past results don't predict the future. So the track record is there, but I don't know if I'm going to be able to keep it or not. But we hope that we do. Hope being a big thing we do here. If anybody has any questions on that, I'm happy to answer them. So let me to recap it quickly. Take every trade, take 5% of every trade. And maybe it's only buying 5 shares, 10 shares. Doesn't matter. You'll find that you're going to grow your account very quickly if you take every trade and not pick and choose, and set alerts 50 cents below the target and 50 cents above the stop. And if you want to know what to do, post me and I'll give you my opinion. Oh, here's the other thing. So the other thing that we need to do to manage the risk on these, or to manage the trades, when the stocks are getting around the support or the resistance level, which is the stop and the target, if a stock is plummeting, get out of the trade. You don't have to wait for the stop. If a stock is plummeting, get out of the trade. Like the Tilray yesterday, when if I see this big long wick up like that, and then the next day it's coming off, I'm not sticking around to see if it holds the support or not. I'm bailing on that stock. But by the same token, no, that's not a good example. That one was let's just say, let's say Marvel. Let's say we had a stop in here at around $50. We bought it in here, and the stop was around 50. And it comes down through, and it trades around it. I'm holding this stock. I'm thinking, well, okay, it's not. So this is why it's important for you to post me and say, what do you think? Are we bailing, or are we we staying in this trade? And I'll tell you very quickly what I think, or what I've done with my own personal position. When they come off a bit and they're consolidating, they're getting close to the support, then I'm going to hold the stock. I'm not going to bail out of it and then have it go against me and boom, off it takes. But if it's plummeting like this, I'm bailing. I don't care what the stop price is. I'm just getting out of it. I'll wait, stand aside. Or by the same token, now this is a bit of a different scenario. Up in here, I said we're looking. The markets might be, getting a bit vulnerable to a pullback, and sure enough, we had 4 days sell-off, very sharp sell-off, and a lot of those stocks went through, or were down or close to the stop loss, or even above them. When I see this kind of action, now there's 2 things to remember. If you don't stay in the trade, in the trend, you'll never make the big money. But when we get big sharp sell-offs like this here, obviously this here was the bear market. Here, not so much there, but at the top of the channel, big sell-off like that. If stocks are plummeting and they're coming close to the stops or going through the stops, you need to get out of the trade. We can always come back and buy them again or find new ones. One thing about this market, there's thousands of stocks out there. We'll find trades. We do every day. We find swing trades every day. And, we know how to pick them. So, you can't let a few days like this dictate you getting out of the trade. But if it's selling off very sharply, stocks are coming off sharp, yeah, bail out of them, and then we'll look at re-getting into new trades if if it warrants it. We'll find new ones, or we'll trade other things. So you always have to keep an eye on the big picture. The trend is up. That's why we're doing so well. But when if stocks, obviously, because we trade very volatile stocks, when they're coming off, you need to bail out of them. Don't hold them. And it just takes experience. And all I can say is if you have any questions whatsoever about a trade, just ask me. I'm happy to respond to them. Post me privately, or or post it in the room with me highlighted so everybody can see what the question is. If you think it's pertinent, if it's not personal but it's pertinent to what should the room be doing, feel free to post it in the room. I'll tell you what I think on it. Absolutely. And there's no emotion to it for me. It's just a trade, and if I make money on it, I'm good with that. If I lose, it doesn't make any difference to me. Because I know I'm going to make it all back on the next one. So there you go. I see there's a few questions there. I'll answer the questions. Let me just quickly look at this. Somebody just, sorry, I'm just looking for the question here. Somebody asked a question. The question was, I think it was key, it doesn't matter. Somebody asked the question, well, if I just have a small account, 25,000, which was not a small account, but let's say you have 25,000 as your account. How do you buy every trade? Well, 5% of 25,000 is still $1,200. That's nothing wrong with that. That's 12,500. You buy 10 shares, you buy 20 shares, you buy 50 shares. Just make sure every trade is $1,500 or $1,250, and just calculate it. And you can, and then just buy that. That'll buy you 20 trades. Or if you get leverage, it'll buy you 40 trades. If you don't have leverage on the 25,000, then just buy $750 per trade. You'll be surprised how quickly it adds up. It's before you know it, it'll be. Just because it doesn't matter. If you use my example of the trade exchange where it's verified trades, each trade is through their platform, can't be changed. I doubled that since the election, buying 5% of the portfolio per trade. Now I've added to that because the portfolio went from 100 to 200,000. So now I'm buying 10% of I'm buying 10% of the original portfolio. Actually, the original portfolio was 50 grand, but it doesn't matter. It's 200 now. So when I put in a percentage, it takes the percentage of the 50 grand. And that's what I originally started, was 50 a year ago. And then it was 100 in November 1st. Now it's 200. So, but I'm based it on, the percentage it goes on at the 50,000. So I take now, because it's 200,000, 5% of that is 10,000. So I try to trade in $10,000 increment. No, I trade around $5,000 or $6,000 increments now on that one. But the point being is, it doesn't matter. I was using 5% of the portfolio, and since November 1st, I've doubled that portfolio just by trading 5%. And so it doesn't matter if you have 25,000 or 100,000 or a million, it's still going to have doubled in that time period. So let me see, what else is there? Okay, so Michelangelo asked me about pulling back or buying on pullbacks. So, oh, come on. Let's talk about maybe, let's see, I'm just going to find one that we could maybe use as an example. For example, here we bought TRXC I bought it at 5 1/4, stop 450. If you look at the original range, it probably says, buy between 5 and 550. If a stock trades back into the original range, then what I suggest you do is you ask me, what do you think? Can we buy this at a pullback? Because the problem is with that strategy, just buying automatically if it buys back into the range, this is maybe after a week or 2 or 3 weeks, is that the pattern might have changed and the trade may not be valid at that price anymore. I will say, I'm looking at these all the time, and I'll say whether I think you should, add to the trade or not. Or if you sold it, we can buy on the pullback. Generally, I don't. Normally, I buy the stock at the suggested price, and then if it goes up, I sell it. If it goes down, or if it doesn't, if it goes down and breaks the support level, then I bail out of it. I don't normally add. But for instance, TRXC, if this popped up now to 7 and you miss the trade, and it pulls back to 5 and holds support, yeah, for sure, you can buy that. You can enter that trade and have it go and use the same stops. If it trades down below, 390 or so, stop it out. But if I up the stops and up the price targets, that is not an entry. Those does not mean you can enter that stock. There's too much risk to enter a stock after I've initially given the initial entry levels. It's you've taken the opportunity out of the trade if you buy it higher than I suggest. So if you miss the trade, go on to the next one, but and don't chase them. Now, if it's your strategy to add as they go up and you want to manage that risk yourself, that's fine. That's your own decision and your own trading style. But mine is just to buy it and hold it and not add to the position. If it does pull back, no, the only caveat to that is if it's at the top of the range, where I suggest you buy half of as much as you want, and then if it pulls back to the bottom of that range, you add and average your price down, and then if it goes through the stop, then you have to get out of the trade. But then if it bounces and away it goes, at least you're in the trade. But if it continues, at least you've got a small piece anyways, of the trade and away it goes. So that's the way that was the way I would handle adding on pullbacks. Then Ash San asked me the question, how do you keep your emotions out even when every trade is going against you? And that happens sometimes. You are cool as a cucumber always. It is because you have so much faith in your system that it has worked over time. Yeah, generally. I mean, I've lost money before, big money, in years past. I mean, I've been doing this a long time. So, I lost $500,000 one day. And so that really thickens your skin up. But for me, it's just, I know it works. So you're exactly right. I know the system works. And if I lose on a trade, I know I'm going to get it back because 70% of the time they're right, 30% they're not. And so, yeah, does it make me mad? Well, not mad. It just kind of annoys me that, like the Ballard Power, the day you put it on, the next night, that night they do a financing and, it sells off a couple of bucks. Does that make you, well, it's annoying, right? You think, shit, that's disappointing. that happened. But, it is what it is. Sell it, go on to the next one. I never look back at trades. And because I know that I'm going to get a Tilray or a VERU or an MVIS and make all that money back very, very quickly. And we have a good feel for the market. I think we have a very good feel for the market. We know where we're going. We're getting aggressive on the semiconductors, and I trade with conviction. That's what it is. I trade with conviction. I buy every stock I buy. I have no doubts when I buy it. I absolutely have no doubt the stock's going to go up. Convinced. Do they always? No. 30% of the time they don't. 70% of the time they do. So I don't second guess. I see the pattern. I like the pattern. I know it works 70% of the time. I trade with conviction. And if it goes against me, I know it's just that 30% that didn't work, and I go on to the next trade. You say generally on a swing trade that you have not entered yet, if the price falls below the entry point, but is above the stop, should you buy it? You can ask me the question. It's not. It's dependent on the chart. So if we put out a swing alert, say on TRX between 5 and 550, and it trades to 475, and you haven't bought the stock yet, the trade might not be as good. You might have to wait before you enter, because we don't know if it's going to continue to go down. We don't know. There's one thing about buying stocks that are falling. How cheap is cheap? We don't know. If they start to come off, we don't know how cheap is. So you have to wait to see how the pattern develops if it trades below the entry level and you haven't bought it yet. And then just ask me what I think. Because sometimes I just put in a range for that may not be a support range, but it's just a reasonable area to look to buy the stock. If it pulls back to go to that level. And if it pulls back below that, I still, I might say, yeah, no, this is still good at that price range. You just have to ask me. We never have regrets. We never look back at trades. You asked me what stocks I traded yesterday, I probably couldn't tell you. I have no idea. Once I trade a stock, I couldn't even tell you what I traded today. I have to look it up to see what I traded today. I traded Mara, AMKR, BLDP, I sold that out, ARTL, FTF, and CTRM. And unless I looked that up, I wouldn't even known what I traded today. So I just don't look back. I don't care. Because you see, once I'm out of a trade, it doesn't mean anything to me now because the trade is done. And so whether I made win or lost on it doesn't matter. I'm waiting. I got out for a reason, and whatever that reason is, I believe in it. And then if I look at that pattern though, 10 seconds later, and the pattern looks good, I'll buy the stock. But it's not. It could be any symbol. It's just a new trade. I don't care what I just did, and I never look at my profit and loss to see how much money I've made today, because I don't want that to influence my buying decision. I only want to make sure that I'm buying stocks that have good setups, and not because I'm profitable or I'm not profitable and I'm revenge trading. So, okay. So I think that pretty much covers everything. If I've missed your topic. Eric Carroll asked me the question, 5% of the current value, or the original investment, 5% of the current value. So if you have a $25,000 account, you buy $1,250 shares worth of it. If it gets up, to 30,000, maybe you bump it up to 1,500 an account. If it gets up to 50,000, maybe you bump it to 2 grand. You know, it's not hard and fast. Just whatever you're comfortable with, whatever you want to, you know, how much money you want to risk. Everybody has a different risk tolerance. And that's one of my problems, is that I have such a huge risk tolerance that I have to keep that in check all the time. Dominic C. asks, is it normal for people to trade with multiple accounts? Yes. Yeah, I have 2 accounts. I have a day trade account and a swing trade account. And they're on different screens, so I can watch them. Super Trader Sam asked me about the BLDP. I mean, you know, that's disappointing. They put out the offering was at 36.5, I think, or something like that. It sold that day to 38. So I thought, okay, this looks okay. It's going to be fine. It's going to continue to go. But then the EV stocks, you know, weren't going anywhere, and big selling came into it. You know, you just have to bail. And bail at your stop when they're coming off like that. It's just disappointing, but you know, it is what it is. Okay, so we'll call that a day on the